Well, good evening, ladies and gentlemen, and thank you for being with me today. It's good morning to our friends on the east coast of Australia. Good afternoon if you're across the ditch or south of Queensland where you're on daylight saving, which can mean anything. So it's grand to have you with us. How's the volume, folks? Would somebody please just type into the question box and tell me that you are hearing all of this all well? Let's see who we've got today. No, 1, 2, 3, 1, 2, 3. Volume's good. Here we are. Norbert, of course, we'd have been lost without you. Norbert lives in a beautiful, beautiful, it's not a pine plantation. It certainly looks like a pine plantation up in the far north cold country of Canada. Grand to have you with us. He's a tutorial guy. Monty's with us. Thank you for being with us, Monty. David Beecham across in New Zealand. Good to have you with us, my friend. And I trust the trading is going just as well as it was. I haven't heard from you for a while. And Norbert said, sugar maples, they're the most beautiful trees. It's absolutely magnificent. So wonderful to have you with us, folks. And boy, what a week it's been. If your pockets aren't full of money for Christmas, by now they should be. We've had the most wonderful trading week in this wonderful, magnificent, exciting, miraculous thing called the Danielcode. Yes, now I've been doing this for many, many years, and I always get excited when we see some of these wonderful moves we've had. It's certainly been sensational. Okie doke, let's see who's with us here now. All our usual friends. Oh, good turn up today. Thank you for being with us. Albert, he's a tutorial guy. Colin, David's a tutorial guy, and he actually runs a version of the Danielcode on the leader-follower program that our brokers, Striker in Chicago use. Hope it's going just as well as it was, mate. George is with us, of course. Thank you. Greg, that's Greg Y. He's a wealth manager and heavy on insurance. He was in Colorado Springs. That's where his business is. Most delightful guy. But he's moved to Texas. So I suppose you're still in Texas, Greg, and I hope you're enjoying it. Giggs just joined us. Giggs a demon golfer. He spends any time he's not trading playing golf. Good to have you with us, Gig. He's in North Carolina. And tutorial guy, of course. Harold's with us. Harold from Redding, California. Most wonderful man. I've had the pleasure of knowing him for many, many years. And I did a tutorial once in Redding at Harold's request. And he was our host and looked after us so well. We had a wonderful, wonderful time. It was a pleasure meeting you, Harold, and hope it's all going well. JR, good to have you with us. Big roll up today. Jeff S., good to have you with us. Lloyd, of course. Mark L., wouldn't be a party without him. Same goes for Murph, who's not far away. Miles is with us. Milton, of course, very important to have you with us. Thank you. Monty, yes, we should hello to Monty. He was quick to tell us we had some volume. Nathan's with us. And Norbert, of course. We've got here Peter. Plenty of Peters, quite a number of Peters, but Peter Mack, who is not a day trader. I keep calling him a day trader. I've got another Peter Mack who is a day trader. Philip's with us. Glad to have you with us, of course. Stephen. Trevor, important to have you with us. Val, wonderful. And Vicky. We don't have many ladies, as I tell you, and we need more. Wonderful to have you with us, Vicky. Right, folks, so grand to have you with us. Let's get started. We've got a whole lot to talk about today. And let's see if we can make this all move along. Here we are. So markets are rational, orderly, and sometimes predictable. So Danielcode's a set of proprietary ratios that control time and price in all markets. And we're going to talk about time again today. We had a pretty heavy session on it 2 weeks ago. And no doubt we'll have more at our next meeting, which will be, I guess, is it going to be the 29th of December? Gosh, time moves along when you're having fun and making money, doesn't it? So happy Christmas to all of you and your friends and families. Happy Hanukkah, happy holiday. whatever spins your wheels along, enjoy it. Have some peace and love over Christmas. I wish you that. It's a wonderful time. You get so busy, particularly with trading and the grind as the machine moves on, that you sometimes lose track of time. And for me, I've had 2 days this week on a reasonably big road trip. My daughter Bodhi's in med school in Sydney. I'm up at the Gold Coast, about 800 to 900 kilometres away, and she's pretty worn out at the end of the year. So I drove down there with my son John and met Bodhi, and I drove her back up here. That's why you got a little note from me saying I was stuck somewhere that was quite beautiful. It was actually down by the river in Maxville, which is in northern New South Wales state. Wonderful, beautiful little place. But I've got to say the Wi-Fi was lousy. So that was that day and a couple more days. So I've been running around a bit this week, and all of a sudden, here it is. The children are home. Christmas is upon us, and it's going to be a wonderful time. Now, since I started the Danielcode website in 2007, I've always closed down about the 18th, 19th of December or thereabouts, sometimes a day or two later, and been closed until after the new year. This year, my children are grown up enough to have their own interests, and I'm not required to do many daddy things at all. So I'm just going to keep trading. It's been so great, I don't want to stop. And I hope you feel the same way. And as we get towards the end of this webinar, I'm going to tell you about a special offer. I'm running tutorials during this period where normally we would be closed. And if you haven't already done a Danielcode trading tutorial where you'll learn everything that is worth knowing about time and price and how to create and trade your own time signals, that's the big banger. Dean S. and let's see who's here. He should be. Let's have a look. Here we are. A few people coming in late. Where are we? I was looking for Greg Palladini, and I don't think he's with us yet. But he's Greg's a very, very interesting chap. He came and he became a Danielcode member in 2015. He did a Danielcode tutorial in Los Angeles in 2016, and then he came back early this year, I think, and came back specifically to do another tutorial so he could learn about trading time. And when he came to me this time, he was a Forex trader. But having seen how trading time on the Danielcode works, he's now become a futures trader. It works the same on all markets. There's no difference. But he's not only done that, he's been very gracious in allowing all of us to follow his progress through his tutorial. And those that haven't seen it already, go to the Danielcode website, click on the tab for forum, and you'll see Greg's thread there. It's called Danielcode Training Tutorial or something like that. And you can follow his progress all the way through. He's just doing marvelously, as are all of you who are trading time. If you're not, you need to do something about it, because the time trading has been absolutely fabulous. And bear in mind, our TO3 and TO3 plus signals and our blue line trades have a very high proportion of time built into them. So you can see from what we're going to go through today just how amazing all of this is. And I guess I don't usually say anything too outlandish, but I guess that I'm getting on with age, and if I don't say it now, I might not get around to saying it. But quite frankly, I think trading the Danielcode time signals is the best trading system I've ever seen or that I've ever heard of. And nobody has ever shown me something better. So that's your opportunity, folks. As I said, I'm going to be running tutorials right through December, and I put it on a special discount offer with a 30% discount. I've never discounted a tutorial before, but I do want to get some of you through in this period where for me it's going to be relatively quiet. Markets will get a bit snoozy and sleepy in a few days. Don't forget, of course, very strong historical bias for an up move in the equities in the Santa rally, which hasn't quite put itself together yet, but then in particular form from Christmas to the new year. It's pretty easy money, so have your wits about it and be prepared. Okay, let us move on. Todd's joined us. Good to have you with us, mate. Sean's joined us. Good to have you. There's a lot of people coming in. Bill joined us. Good to have you with us, mate. Chris as well. Another Colin. Yeah, okay. Right. Here we are. Yep. Thank you, guys. Thanks for being with us. Okay. Let's roll along. Huh. Big roll up. Wonderful. Okay. Have a look at this. I've called time the last frontier. For me, it came very late. I spent many years, and I mean many years, working on the Danielcode, trying to decipher it, trying to understand it. I still had my law practice in Sydney at that time, but I was spending so much time on trading that I said to Mrs. Needham, in fairness to my partners, I've either got to stop trading, or at least I've got to really find out what makes markets turn. And I'd spent years before that going to seminars, tutorials, whatever you want to call them, pretty much all around the world for all the big name gurus. And of course, the example that you get always works well. Never bet against the example. The odds are very bad, but nothing worked well enough for me to just give you that continuous growing equity curve, which is what I needed. Eventually, I'm going to say I discovered the Danielcode. Parts of the Danielcode were revealed to me, might be a better way of saying it. And I remember I was very excited. I ran downstairs and said to Mrs. Needham, Eureka, I have it. This is it. This is the silver key. And of course it wasn't. All it was a thread, like most of these things. But if you pull on a thread, you get a bit more string, and then you eventually run into another couple of knots. And that's exactly what happened. And over the years, I refined it and developed it. But I never spent much time trying to work out trading time. And a particular guy that is a very, very well-known guru in the business. I've been to a couple of his very expensive $10,000 for one day seminars. And I can remember him talking about time and saying, forget about it. It can't be done. It's rubbish. And that if you ever make 2 hours trading time and say to your bank you've made 2 hours, they'll say, so what? But if you made 200 points trading a futures market, your bank would lend you some money. So stick with trading price and forget about time. And what I didn't know at that time, and of course no one wanted to tell you because I don't actually think anyone else knows, to be quite honest, but time and price are the same thing on different axes, and I'm going to prove that to you today. And trading time should be the most normal thing for you. And there's no literature other than the Danielcode that understands, uses, and embraces trading time. And I should preface that perhaps by saying serious literature. There's a whole lot of stuff that's related to star signs and astrology and astronomy, and it's not serious because you can't prove it. But you can prove, and we do prove, the Danielcode every day. And if you go to the website, www.thedanielcode.com, and click on the link that says Chart Archives, you will see there over 40,000 members' charts that I've created since the website started in late 2007. And you'll be hard-pressed to find a market that's turned anywhere accept the Danielcode numbers. Now remember, Danielcode target recognition is valid for at least 2 and sometimes 3 days once it's given you that near perfect target recognition. And by near perfect, I mean the high, the low, or the close of a daily bar must be within 0.1% of the actual price. In other words, the price on the bar must be within 0.1% of the price on members' charts. And that's a very, very high degree of precision. And we need that before we get a signal. And as you'll see, we get that all the time. But if you're using daily, weekly, or monthly charts, you're already trading time. One day is simply one rotation of the Earth around its own axis. And since time is so certain, we should be able to divide the time cycles with a high degree of accuracy. And we do exactly that. So start at the beginning. This is the source code from Daniel. Now, don't all jump up and down and be offended. Being offended about knowledge is stupid. You don't have to have any opinion at all about where this has come from. I have an opinion. You don't have to have the same opinion. You don't have to have a different opinion. You simply have to realize that these are some written words, and I've underlined the ones that count. It shall be for a time, times, and an half. That is the time sequence. That is how time advances. And we then get 2 interesting numbers. The first one is 1,290 days. That's pretty straightforward. The next number is 1,305 and 30 days, which is a rather old-fashioned way of saying 1,335 days. And once we have those numbers, and that's all we have, that's all we need, we can use some really simple math. You can do all of this with a $4 calculator, and we get some other numbers. The first number we get is 45 days, which can also be 45 degrees. Days and degrees are fungible. Time, from historical sources, is fungible. 70 days can mean 70 weeks, 70 months, 70 years, 70 decades, etc., etc. And days and degrees are fungible. And that's an important step in working out, because the minute you get 45 degrees, of course, you're talking about fractions and percentages, because 45 degrees is 1/8 of a circle. And that's where the rule of eighths comes from. Remember, until decimalization, some of you are not old enough to remember, of course, and more power to you, the markets, all markets, were quoted in degrees of one sort or other. Some of them still are. The traditional CBOT markets, particularly grains and T-bonds, they all work on the rule of eighths. And getting 45 degrees in this calculation opens up straight away that is 1/8 of a circle, or 12.5%. And if you follow the time progressions, which I've set out for you here, you finish up getting everything in the rule of eighths. 2 of which are still very important because of the problem with Fibonacci and the rabbit. Now, for those of you that have ever used Fibonacci numbers, you should have asked where they came from. And where they did come from, Fibonacci was a young math student in Athens, Greece, back in about 1200 AD. And like all students, he had an inventive and smart, sharp brain, and he came up with, he thought, and his friends thought, a hilariously funny announcement about rabbits. So it became an in-joke. Now, an in-joke is a joke that people who are in on the whatever the subject is, they find it hilarious, and nobody else knows what it's about. Now, my daughter Bodhi did her PhD at the age of 26 or 27 in psychology, and she's a math witch, is what they call her, what's the exact word they use? A statistic queen. She's a stats queen. Everyone hates statistics except for those who are very, very good at it. And she was teaching statistics at Bond University to the students there while she was doing her PhD and writing her doctorate. And she would wear these T-shirts saying things like, I'll meet you at the bell curve, which, if you were into stats, was hilarious. A bell curve is just a graph that shows the design of a normal distribution, a normal population distribution. So she had half a dozen of these, and other kids who were doing stats or being taught by her to do stats, they thought it was quite wonderful. And Fibonacci did the same thing. And back in the day, about 1200 AD, there were no refrigerators and there were no freezers. So getting a supply of protein, particularly meat, was a bit difficult. If you were out in the country, I suppose you would catch and kill your own. But if you lived in a city, it wasn't easy. And if you lived in the city of Athens, very, very beautiful city, you had to find out when the butchers were going to be working in the market square, what day they were killing a beast. You had to get yourself down there, buy a chunk of beast or a leg or a shoulder, whatever it was, to carry it home, and then try to preserve it with no refrigeration. The simplest way, of course, was simply salting it. But there was another way of getting meat, and in the same way as most country people have chickens, until not so many years ago, a lot of city people had chickens as well. They were very easy to manage. Some chooks, they lay beautiful fresh eggs for you every day, and at the end of their time they've got lovely feathers that go to stuff a pillow or stuff a doona, and the meat, you eat it. Very, very nice. But back in 1200, the Athenians did it slightly differently, and what the average Athenian did is they farmed rabbits. Rabbits are lovely little gentle creatures, very easy to farm, very easy to handle, and as they went along in their lives, they produced a very nice meat. Rabbit meat still very popular in other parts of the world, England in particular. A lot of frozen rabbit meat in every delicatessen and store you go to there. And at the end of their lives, beautiful bit of fur to line your jacket with, line your mittens with, line your shoes with. Wonderful. And so Fibonacci started out with his in-joke to his friends. And what he said is, if you got one rabbit and you add another rabbit, you've got two rabbits. And pretty soon you've got three rabbits. And then after that, you've got five. In other words, his whole Fibonacci sequence was about the optimum fertility of rabbits. Okay. And if you think that's a silly story about Fibonacci, I do too. But it's as good an answer as anything for how some guy once went along and saw the Parthenon in Greece. This is the more traditional story, and said, boy, it's a wonderful proportions. I want to measure those proportions, height against width and length, and then I'm going to express them in fractions. Oh, look, here it is. It's the Fibonacci ratios. And then somebody took it a step further and said, I've read about this. I've read a number of books about it now. It's becoming popular. I'll start putting those Fibonacci numbers on a chart, and they should provide support and resistance. Well, what really happened to it all is that the New York Market Traders Association used to set the exam if you wanted a Section 7 certificate in the US to trade other people's money. And they made it mandatory to study Elliott wave theory. And this is not original Elliott wave theory at all. It's very simple and very basic. But it's the version that Bob Prechter and his mate Henderson developed. And they went from having 5 simple rules to having about 500. And in my view, I think Elliott wave was a total curse and a virus. But for the last 45 years, we've been forcing everyone who wants to be in the business to study Elliott wave. So some of the Elliott wave numbers, or some I should say the Fibonacci numbers, 61.8 and the other 38.2, they became part of trading law by usage, because whenever market makers don't know where to park the market, they've been trained to try and park at the Fibonacci number, and it never happens. And Fibonacci numbers are approximates, Danielcode numbers are exact. When they're trying to park that number at 61.8, I guarantee you it'll either be at 59.3 or 62.5, both of which are Danielcode numbers. 59.3 comes the original Daniel's code, the source code you're looking at now, and the other one, 62.5, comes from the rule of eighths and is incorporated into the Danielcode ratios. So it's interesting how all these things happen, isn't it? But don't be fooled. If you're doing Elliott Wave, I'm sorry for you. I've had more people come to me and say I've been trading Elliott Wave and I've lost a lot of money. Oh, terrible thing. Anyway, the Danielcode, unlike any of that, is simple, straightforward, scientific, and more importantly, it's provable. So don't forget, when those numbers that I've just given you, we're splitting those. We're taking 365.37 days and we're spreading it over 251 trading days, because we lose 104 days every year from weekends, and there are 10 or so market holidays. So if we're taking 365 and we're spreading it over 251 or thereabouts, what it means is that the decimal points are not relevant. You can forget about the decimal points altogether. Interestingly, markets are really a reflection of, there's an L missing in there, from reflection to reflection, and of human emotion. And they adjust so marvelously well. Those of you who've been with us for a while will remember earlier this year I showed you a chart, a new front month chart that had, I think it was the S&P, that just had dots for the period before rollover, and there were nothing but dots leading up to January. But even using those dots, we were able to create targets that were so amazingly accurate, whereas almost everyone just looks at those dots and says there's no data. In fact, there not only is data, it's true and it's usable. So the simple way of dealing with the discrepancy between actual trading days and calendar days is we simply say time is valid for plus or minus one period. And that does the job, which is pretty amazing when you think about it all. So let's move on. So is this just mumbo jumbo, or does it actually work? So anytime you know something that others don't know, you have a huge advantage. And that's what makes Danielcode time trading both unique and outstanding. Now, some of you will know, no, but I've spent money on it, and I fully agree about Procter & Co. Absolutely. It's ridiculous. Nonetheless, Danielcode is a very, very small business. We've never advertised, and you've got to find us. And to most people at first blush, it probably looks a bit strange. So what we know at the Danielcode about time in particular, and remember, time and price are the same thing. I'm going to show you that. But what you know at the Danielcode is not known to others. Anytime you know something about the market that others don't know, you have a huge advantage. And that's what makes time trading both unique and outstanding. So this is gold, folks. I'm glad that our friend is here. Oh, Toddy's arrived. Hello, Todd, Southern California. Good to have you with us, mate. Mark L's now arrived. Everyone came in a little bit late. Anthony D, haven't heard from you for years, mate. I'm glad to have you with us. Wonderful. Bill, you as well. Chris Legg, yes, you as well. Thank you, mate. Wonderful. Let me just find. Chip has arrived, and as I was telling you, I'm putting on some tutorials with 30% discount over December, and we just sent the email out yesterday, or maybe today. If you haven't received one, do email me, jneedham@thedanielcode.com, or else see the letter at the end of this webinar. Chip is a wonderful guy. He came to a Danielcode tutorial in Los Angeles, I think maybe 2016 or thereabout. And anyway, he was the first to bounce the ball and say, yes, I'm going to do the tutorial again to learn about trading time. And I promise you it will blow your head off, Chip. It's marvelous. Yes, so I wanted particularly to show this to Harold from Reading, who's with us. Harold, have a look at this. This is a really, really simple scrunch-up chart that runs from before March 2020 to date. And all you've got on there is quite simply expiring 29-day time cycles. Have a look at that. Suck it in. Pretty extraordinary, isn't it? So they're the major cycles. Well, that's one of the major cycles. Once you can get the major cycles, you can easily create the minor cycles, which is what we use for our daily charts. And every single turn in gold and every other market has come at one of the 29-day cycles that have run this whole program. Every chart does the same thing. Every market does the same thing. I know it's extraordinary. I promise you it's true. So what we can do is once we've got those things, we can look at our daily requirements, our daily charts. How do we break the 29-day, which we call time? It's not the only measurement of time. It's a measurement of time. It's our primary measurement of time, and everything else flows from that. I just wanted to remind you of something I showed you at our last session, and this is this idea that when the moon and the sun are on the same side of the Earth, that's when you get a new moon. That's when the gravitational pull of the moon, which is substantial, we talked about tidal flows and air tides at our last session. The sun, of course, has, I think, 157 times the gravitation, but it's so far away that that's diminished very greatly, and it doesn't act on the Earth with the same power as the moon's gravitation, which is much smaller, but also much closer. When you have the sun and the moon both on the same side of the Earth, you get a new moon. When they're on opposite sides of the Earth, in other words, you've got the sun's gravitational pull pulling the Earth one way and the moon's gravitational pull pulling it the other way, you get a full moon. Now, occasionally what you get is a perigean new moon. That's the top illustration here. And that happens occasionally, not always, that you get the new moon at a perigee. And a perigee, we talked about last time, is the time when the moon is the closest in its cycle around the Earth. The furthest away it will ever get is called an apogee. The closest to the Earth it will ever get is called a perigee. And when you get a new moon at perigee, that's when you get supermoons. Those sort of extra bright, extra large moons, they're called a supermoon. And they don't happen very often. In fact, the last supermoon we had was the 1st and 2nd of January 2022. And you can see from this chart that, of course, the last bar, the bar that this is actually starting on, is the 31st of December. And then we get a 3-day break because we had a weekend and the New Year's Day holiday. So if I move this up one bar, you'd actually be moving it up 4 days. And I wanted to show you this. Here is the whole of the trading of 2022. And if you look at the time cycles there's various time cycles there. There are many. These are the most dominant ones. Working away to your right from the start of the chart, casting your eyes across, have a look at that. The first 14-day cycle comes right at a major low. The next cycle comes 2 days from an apogee that gave us a high. The cycle after that is 1 day. It's actually the closing low, but it's 1 day before that big key reversal bar at 37 days. The next couple of days give you 2 lows, 2 days off, one day off a high. The next one gives you the second of the lows, then straight into the high, in April this year, right at the 62 blue line. Next one gives you the low. Then we get a bit of up and down stuff. We actually have different cycles running in there, but to put them all on one chart becomes a bit confusing. So move along and you'll see all of these cycles are hitting a high or a low within plus or minus 1 or at most 2 days. Quite extraordinary, isn't it? Have a look at the big high in September, 1 day past the 59 cycle. Have a look at that difficult, sticky low we got in the end of October, early November, where there was a massive put-call position, a wall of options underneath it. And the actual closing low was right on the time cycle. The low that gave us the chart low, where it ripped down into all of those bunched options closeouts and reversed. It looks like it's the low. It is the chart low, but it's not the closing low. And we've got different things. Just follow across from there. In November, we're back to 1 day past the high at a perigee, 1 day past a low between an apogee and a perigee, got the next high perfectly, got the mad blow-off high we got earlier this week. So that's just one simple set of time cycles. If we put them all on, we get every single high and every single low on this chart. And it becomes confusing if you're not used to it. But that's actually what I look at together with the members charts, which you can all look at. And we do, I think we do 16, it might be 11 and 9. We do 20 Forex and futures charts for you every week and twice a week. In fact, sometimes every day if the market's got excited and run away from our numbers. And for the other markets that we cover, another 12 or 14, for which I don't publish members charts, I actually have those charts here and I look at them every day. So all I look at when I create the signals for you, the TO3, TO3 plus, and the time signals in 6S, all I'm looking at is the time cycles and the price levels. And they're actually the same thing. And that's the hardest thing for people to accept and understand. Sometimes when you get a whole lot of volatility and a dramatic change in market direction, which is what we've had the last 3 days, that's come about because we've had a switch of cycles. You can see they're the same cycle, but they're coming from different places. One of them starting from a perigee, the other one starting from another perigee, but it's 4 months later. And when you get that change of cycles, it's a bit like back in the day when you used to drive a manual car. If you didn't, and you were trying to downshift before the day you had a synchronized gearbox, shows you how old I am, when it was really driving and great fun with it. If you got the revs not quite right, you got an awful, and that's what happens when you get a change of time cycles. That's what happened here. So the market simply doesn't really know what to do with it. And that's what happens when you get volatility and a snapback change like that, which of course for us is great trading. Now, when I tell you time and price are the same thing, have a look at this chart. This is a Forex chart. This is the Canadian dollar chief, the Swiss franc. Have a look at these last 2 bars you can see on there. Wednesday's bar, remember I told you that before you can get a turn, you have to have target recognition. If you know nothing else except that, you'll be in the top 4 or 5% of traders in the world, because, excuse me, unless you've been a Danielcode client, no one knows this. It's crazy. It's the best thing in the world. We all know that stochastics and those sorts of tools, as Gann famously said, stochastics can stay overbought much longer than you can remain solvent. They're crude instruments. The studies we use, momentum indicators, stochastics, RSDs, they are crude instruments. But have a look at this with time. This is a market that's well into its long drop down. It's the weakness in the Canadian dollar. Have a look where it closed on Wednesday. The close of that market is 68.23. The Danielcode blue line, which is a function of the Danielcode time ratios, was at 68.22, one tick variance. The very next day today, the close today of this market, was 67.98. Where's the Danielcode blue line? 67.98, zero variance. We often get that. It's amazing. That's the proof of the whole concept of trading time, because that blue line is a function of time. And it's what I tell you, that time and price are the same thing on different axes. And hardly anyone in the world understands that. So if you think that's not true, I ask you to go to the Chart Archives tab at the Danielcode website, www.thedanielcode.com. Take a look at those chart archives. There are over 40,000 of them. They are the members charts that I've created since late 2007. They're posted for members. Of course, they should have the first advantage. They're paying for it, and they have them for 30 days exclusively, and automatically thereafter they're posted at Chart Archives. Every single chart. But be aware that you can actually get a turn. You can get target recognition, for example, as we did yesterday, and that will be valid for 2 or 3 days. It may not get target recognition at the extreme highest or lowest bar, but this is exactly how it works. Target recognition is the first prerequisite before you can get a market turn. And if you know nothing else except that, you'd be in the top 4 or 5% of traders in the world. And we produce that for you all the time, every day. There it is. Okay. Let's see what you did this week, folks. So filling up your pockets with a whole lot of money before the Christmas starts. Just have a look at some of these charts. This morning, I started this at 4 o'clock, 4:30 this morning. Most of these actually come from the computer on which I create your members' charts. You'll see those as we go along. But some of them are often on a different computer. I didn't have access to it this morning. It's apparently going through a change of some program or other at GoDaddy. But here we are. This is a Euro GBP Forex pair. You had a correlated TO3 signal here. You had the sell, and then you had a flip me buy. Make sure you think that through, folks. If you're not aware of flip me, go back through some of our previous webinars. It's pretty deadly stuff. And that returned an easy $1,300. Someone start adding this up. We'll see how we've gone for the week so far. So there was $1,300. This is coffee. We had a straight TO3 buy signal. Big outside day. The market rushed down, found a Danielcode target at the bottom. Was two ticks away from the actual target. Turned around and roared up. $4,200 there into today's close. Here is another correlated market. This is the Dow. We cover the Dow by correlation. We don't cover it directly, but you should be aware that all of the US equity markets, that's Russell, Dow, NASDAQ, and S&P, and Germany's DAX, are so highly correlated that a signal in any one may be executed in any other, provided that the signal is elected. The same applies, of course, for gold and silver, and the same applies for a host of Forex markets. If you have USD on one side of that Forex pair, every other market with a USD pair in it will go the same way, unless it's one of those ones that they've switched and put the Canadian dollar first rather than US dollar, etc. But if you want to trade correlated markets, you can trade this is the Dow. You can trade the Dow, you can trade the NASDAQ by the correlated signal. So if you see a signal for the S&P, you can trade the NASDAQ if you want to. If you see a signal for the Dow, you can trade the NASDAQ or the S&P or the Russell if you want to. That's how highly correlated they are. You can see with this little turkey here, he's just been racking up money day after day after day, pretty simply straight off the correlated signals. Great trading. $8,000, $9,000, $10,000 this week or so. Here we are. This is the Aussie dollar, which has been insisting that it's bullish and going up and up and up and up and today it's had a bit of a dose of reality. It appears as if it's having a reaction to the government's stupidity about trying to control gas and electricity prices. In fact, it doesn't think that deeply. What's to set this thing off? It's simply that the US dollar has strengthened significantly overnight. And that's what you're seeing here. This Aussie dollar weakness is in fact US dollar strength. But there was an easy $1,100. You had the signal. You just had to put it on. Here's Euro AUD. We had a sell signal there. Just got the first part of a bar down. Needs to follow on a bit to be worthwhile. British pound USD. Remember, these are all correlated with the USD on one side. $1,600 straight down. And look at that close of the setup bar. It's closed at 1.2427 on Wednesday. Where was your Danielcode number? 1.2431. 4 ticks variance. Amazing. That's target recognition. That's within your 0.1%. Perfect. Sets it up. You know you got a signal coming. And of course we posted it a blue line and a TO3 signal. And there we are. So let's now what's happened here? We've got to go and find where we were. Okay, I've gone back a bit. I've had a operator's malfunction. Forgive me, it won't take long. We've had that, we've had that, we've had that, we've had that. Here we are. British pound USD, same thing, exactly the same. New Zealand dollar USD, it's been rallying. I don't know why. Jacinta Ardern, the Prime Minister of New Zealand, famously announced that no child under the age of maybe 5 or 6 is ever going to be able to buy a packet of cigarettes legally in their lifetime in New Zealand. I mean, talk about the nanny state gone mad. It just, of course, she was socialist, young socialist of the year back in the day, the lovely Jacinta. So now she's Prime Minister of New Zealand and able to give a full vein and full vent to that absolute arrant stupidity. This is the dollar CAD. This is the loonie, the US dollar Canadian pair. Simple TO3 buy signal the day before gave you perfect recognition on Tuesday. Very good recognition on Wednesday. You can't see the line that was there. It closed exactly on it 2 days in a row. And that set us up together with our other studies. Up it went. More money. Here's the really interesting US dollar Japanese yen. There is an absolute crescendo of drama around the Japanese yen. And it's because the Reserve Bank, the central bank it's called Bank of Japan, BOJ, the Central Bank of Japan has been holding their domestic bond rates at the old rates they were at, like 1.5% or even less. And economic theory tells you that you can't do that without paying the price in your exchange rate. So there's that confluence going on. There's been absolutely amazing volatility in the Japanese yen for the second half of this year. Gives you some great trading opportunities, no matter how volatile. It all just is ruled by the Danielcode. We had a TO3 buy signal actually on Tuesday, carried forward to Wednesday. Buy it today, easy $1,300. And this is what has set the cat amongst the pigeons. The US dollar index, DX, wonderful TO3 buy signal. You can see it's closed there. I can actually tell you exactly what happened there. Let's see if these glasses are strong enough. Wednesday, the close was 103,595. Excuse me, where's the blue line? 103,555. That looks like 40 ticks, but they've added the half on to make that happen. So that's less than 0.1%. Sets up a new TO3 buy signal. Up it goes today. Very nice. This is a small market, but it's a sweet one. Unfortunately, it's on the ICE exchange. Excuse me a moment. It's on the ICE exchange, as are coffee, and something else we trade that's on the ICE exchange, and some brokers don't like it at all. They're too lousy to spend the money to get a feed from the exchange. But it's a small market, the US dollar, but very good, and it's an important market to be aware of, because when you get a significant change in the dollar, it has lots and lots of other effects which you've been looking at today. So let's move on. This is gold. This is for you, mate, up in Reading. Have a look. Simple TO3 sell signal, $1,900 now. If you have not done a tutorial, and if you're new to trading, I tell you not to trade the inside bar, trade the last bar that was not itself an inside bar. If you've done a tutorial, I've taught you to trade inside bars at the highs or lows, and this is why you have to. There was $1,900 there, and $1,800 of it was taken up by just clearing the previous big up bar, and that's just money you don't want to leave on the table. So when you do your tutorial, we'll certainly spend lots of time talking about that. This is Germany's DAX. Not many of you trade it. There is a new mini DAX market available now in the US, but it gives wonderful signals, and for large parts of this year, it's actually been running a day or so ahead of the US equities. It's been a wonderful lead in to know what to expect. $6,600 in a day here, and you actually had an unusual buy. It was a TO3 plus buy from that red inside bar that I've got it marked to, and you had the flip me sell when it came back. If you're not aware of the flip me trades, have a look at some previous Danielcode webinars. They're all on the website, and you can find out about it. Copper, simple trade. Very nice, like to have it, more money. TO3 sell, target recognition, and then off she goes. This is the NASDAQ, folks. It's one of those charts that is on the other computer. Really simple, TO3 plus sell signal in the NASDAQ. Down it goes, $7,000. Keep adding it all up. Russell, this was all today, and yesterday, a few of them. The bulk of it all today. This is the Russell, same thing. TO3 sell signal, 1 day down yesterday, 2,400 down today. Stops right at the blue line. What does that tell you? And how accurate is this stuff? Is there any reason it should? Of course it does, because the Danielcode is the DNA of markets. This happened all the time. That exact close today was 1785.2. Where's our blue line? 1783.5. Not much variance for a move of this side, is it? Have a look at the great big up bar. It stopped just before the 1907.3 black line. I haven't updated these charts, folks, so don't take the red and black retracements as gospel at the moment. I haven't updated them for that. That'll be done on the weekend. Here we are. Finally, I think this is silver. Correlated market. You get the signal in gold. You can execute it in silver. You get the DC Danielcode signal in silver, you can execute it in gold. In this case, we had TO3 plus sell signals for both of these markets. Silver has been a very, very good trading market this year. So this is what I was talking to you about. This is a special Christmas sale, Danielcode trading tutorial, one-on-one with John Needham. If you would like to do a Danielcode tutorial, this is your best opportunity. I'm going to work through Christmas. There are slots available for the Danielcode tutorial before and after Christmas. We'll be closed just for the festive days as the market is. Apart from that, can get you done, can teach you everything you need to know about trading price and time and make you a super trader. Some of you have done a tutorial earlier on before I was teaching time. This is a great opportunity for you to come back and learn about trading time, all these marvelous trades I've been showing you. Chip, who's with us today, he's he was first in, sent me an email just a few hours ago saying, book me in, I want to do this. This is a great opportunity. We've never discounted the price of the tutorial before, but I've got some time in December, and I really want to teach you this stuff. promise you it will blow your mind. And we've got so many testimonials and endorsements, it's hardly true. But give yourself a serious present. Learn to trade Danielcode time and price, and that is a present that will last you all your days. You'll have it forever. You can teach your children. And it's a wonderful, wonderful way of making money. It's always there. Markets never close. It goes on forever and ever. Just an absolute wonderful asset to have. So it's all good news for us with trading. No inflation in trading futures and forex. We couldn't care less about it. What we do care about is that equities have been going both ways all year, and that is just so lovely. That is so much more interesting and profitable than that endless one-way crawl that we were having until then. Drama and fiscal catastrophes just add volatility. Volatility is our friend. It's our lifeblood. So happy days indeed. Learn to trade the Danielcode now. Send me an email and I will reserve you a spot for your tutorial or your updated tutorial if you've already done one. Thank you, David. Happy Christmas to you as well, my friend. And I think that's pretty much just about us for the moment, folks. Remember, the business of trading futures and forex is not to be right. The business of trading is making money, and that's what we do all the time. If you haven't already, do feel free to take a free trial. Go to www.thedanielcode.com. Start your free trial. Just hit the register button. If you've already had a free trial previously, the computer will remember you and will not want to give you another free trial. In that case, simply contact Terry at support@thedanielcode.com. Let him know that you can't get your free trial because of whatever reason. He will assist you and enable that for you. Finally, remember that there is considerable risk in trading. It's also a risk playing around clicking buttons in computers, isn't there? Okay, so we're trying to show you our disclaimer, and there it is. Do take this seriously. It's very, very easy to lose money if you don't know how to trade. Funnily enough, it's the one thing you can't learn off the internet. But don't risk real money until you're really confident you know what you're doing. The statistics say that 90% of new traders lose their first bank in the first 90 days. My view is that 95% of new traders lose their first bank in 10 or 12 days. It's deadly stuff if you're on the wrong side of it. The wonder about futures and forex is that they're leveraged. And it's that leverage that makes them so wonderful for us to trade. But leverage cuts both ways. So if you don't know what you're doing, don't start using real money. Just trade paper trade until you're confident that you understand what you're doing. And the best way to do that, of course, is take a Danielcode tutorial or join the Danielcode and just take the TO3 or even the TO3 Plus signals. See how they work. Get used to what they do. And that will start your great journey of adventure and excitement as we go along. So that's it for me today, folks. Jeff, thank you. Jeff, he enjoyed it. Glad to have you with us. And Chip, happy holiday indeed, mate. Talk soon. And happy holiday to all of you, my friends. I've really enjoyed. I treasure your company during the year. We've had some wonderful talks. I've certainly enjoyed them. And of course, I very much appreciate your support while we're doing this. So all the best for the rest of the year. Danielcode will be here and working along other than the statutory holidays. And I look forward to seeing you at our next webinar, which will be on the 29th of this year. Thank you, Gig. I hope the golf course is looking grand. All the best, friend. Bye-bye.